Hello. Okay, hi everyone. Hi, welcome to our webinar. Hi Brian, hi Joash. Hi Mama, hi Tuan. Guys, just remember that we are streaming on different platforms. We're on YouTube, Facebook, Vantages, Telegram, and their website. So if you guys do have a question, just drop it straight in the chat box and I will be able to see from my end. Okay, I'm going to start today's webinar. Hey everyone, welcome to our webinar today. We're going to be doing live analysis session. We're going to do a strategy clinic. Okay, sorry it says breaking news and setups here, but today is actually strategy clinic. Let me just let's move straight into the disclaimer. Please remind that any information or anything I share in this webinar should not be construed as trading advice and should only be taken as educational. Okay, risk warning: trading, Forex, and CFDs, especially if you are trading on margin, carries significant risk and is not suitable for all investors. So please be cautious if you are trading, especially if you're new. Hey, Phillips, welcome. Hey, William, welcome. Welcome. Yeah, we're just running through the disclaimer right now, so you're not late. Okay, for those who are talking to me from YouTube and Facebook, if you are saying something and I'm not responding to it, it's most likely because there is a possibility I'm not receiving your message from my end. So the best thing you can do is just to hop over to Zoom. Hey, Deborah, welcome to webinar. I see a lot of new names today, actually. Okay, I'm just gonna slowly do the introduction. So by the time I'm done, everyone would have been settled in already. Yes, so I was saying trading Forex and CFDs carry significant risk and it's not suitable for all investors. Trading, especially on margin, just multiplies the risk by the amount of margin you are taking. So please do be cautious. Do not put your life savings into this. Please diversify and please do not take anything I say today as investment advice. Okay, again, this is educational. We are all here to learn. The whole point of these webinars is to help you guys be better in trading and to grow your account, and hopefully that leads to you guys growing your account. So if you guys do have any questions regarding trading, it doesn't matter if it's technical analysis, fundamentals, trading psychology, or risk to reward, risk management, you guys can ask in the chat box and I will do my best to answer. Okay, so don't be shy. Again, a reminder, the whole point of this webinars is to help you guys get good at trading. Okay, so everyone's good with the disclaimer, right? Let me introduce the team. So we've got Desmond Leong, he's our CEO and our chief trader here at Everest Fortune Group. You've got me and you've got Melanie and Joanne. Okay, for those who don't already know who we are an award-winning fintech company. Okay, we're the finalists for the best Forex and best equity research for 2019, 2020, and 2021. So what we do on a daily basis is to well, basically backtest and research where we think the markets are heading, and we advise brokerages, banks, hedge funds, and a lot of financial institutions. Okay, so again, if you guys have questions, drop in the chat box, don't be shy. For those who don't already know me, my name is Cass. I am a prop trader and investment analyst here at Everest Fortune Group. Right, I specialize in catching reversals, but well, these days I try to look for continuations, and I do that using confluences and Fibonacci confluences combined with indicators, just market trend and support and resistance. Okay, so what I am going to show you guys how I find these setups in today's webinar. Actually, I do want to know if you guys, can you guys let me know in the chat box how experienced you guys are in trading or like in technical analysis, so that I know if I should be going fast or slow today. Because I will be looking for trade setups today using my strategy that I use on my strategy, and I don't know if I should be explaining to you guys in details what certain things mean, or if you guys are good, because I do see a lot of regulars here like Philip Williams, Brian, Joe Ash, Zara. Been trading for a year. Okay, been trading for a few months, new here. Okay, I'm getting mixed answers. So I don't know how slow or fast you guys want me to go, but it doesn't matter. I'll just go on my normal speed. If you guys need me to, if you guys need to clarify anything, hey Baptist, welcome back to our webinar. If you guys need me to clarify anything, like why I'm drawing certain things or why I'm placing things or why I'm taking a certain swing high or swing low, just ask me in the chat box and I will explain why I'm doing certain things, okay? Okay, cool. So that's the end of the introduction. Let me share my screen so you guys can see the charts. Can everyone see my charts? Can everyone see my charts? Okay, I have seemed to lost the chat box. I don't know what you guys are saying. Perfect. Okay, happy to be here. I'm glad you're here too. Oh, okay. Okay. Can you guys let me know in the chat box if you can see my chat box in the screen as well? Like, am I the only one that can see the chat box, or is this everyone? Because if you guys can see the chat box, I'll just place it somewhere in the screen so that you guys can have full access to my screen. Just the charts. Okay, cool. Thanks, Philip. Thanks, Philip. Okay. So if you guys have any requests or anything, any instruments you want me to look at, Forex, cryptocurrency, preferably index. Thanks, Baptist. Just let me know in the chat box and we can analyze that together. Okay, if you are already in a particular trade and you just want a second opinion on an analysis, you can request as well. If not, I'm just gonna jump straight into Ethereum just because Ethereum is already on my charts right now. Okay, let's start with because we have a lot of new people here, I'm sorry for like the regulars like Baptist, Philip, Williams, Joash. You guys just have to bear with us going through the entire strategy again. But then again, it's just a refresher, right? So I guess if you attend this webinar enough time, you eventually know you can probably just do whatever I'm doing on your own already. Okay, so I've got Deborah. Okay, so I finally got some requests coming in. BTC USD, JPY baskets, EUR JPY. So Baptist is saying EUR JPY double top H1 double daily if I remember well. Okay, let's start with EUR JPY 2. I want to see if there's that double top there. This is the daily. I do see a double top forming. It's not completed yet, but it is still forming. So the requirement for double tops is that it has to make kind of like an M pattern. I see this M pattern here as well on the 1 hour. So good catch, Baptist. The requirement for double tops is that it needs to break the neckline. Okay, in this case, I think it already broken the neckline, right? It looks like it has already broken, which is confirming that bearish momentum. But if you want to be like super safe, like double, triple, you want your double, triple confirmation, I do see like some kind of support here. So the double, triple confirmation could be to wait for the break of the support and then continue with that sell. Okay, because the break of the support would just further confirm that the bearish momentum is strong. Okay, so actually, let's just quickly analyze EUR-JPY. Again, for those who are here every week, I am going to go explain in detail. This more for the new people here, okay? Because I do see a lot of new names today. Hi, Muhammad, welcome to our webinar. Hi, Tuan, welcome. Okay, so the first thing I usually do when I look at the charts is I identify trend. So I have a kind of like a checklist of questions that I ask myself or like things that I'm supposed to go through. The first thing I want to identify, I want to tick off my checklist is trend. That means I want to know if charts is going on an uptrend or a downtrend. And it also depends on the time frame you're looking at, okay? So let's say you plan to take a trade on the 1 hour charts, you should reference the 4 hours. If you plan to take a trade on the 4 hours, you should reference the daily. Okay, so you always go one time frame higher. Okay, I know I said 4 hours when above the 1 hour is actually 2 and 3 hours, but for 1 hour we reference the 4 hours, and for 4 hours we reference the daily we reference the week, the weekly we reference the month. Okay, so you just have to go one time frame higher to reference to see where the overall trend is going. So the first thing I do is look for trend. Why am I looking for trend? It's because when I identify trend, I have already won half the battle because trend is your friend, okay? So you want to play the continuation unless you want to play the reversal, which actually doesn't, it happens on a daily basis, right? But your chances of catching continuations is much higher than catching reversal trades. So especially for the new people here, I do strongly recommend that you catch continuations rather than reversals, okay? Because I think catching reversals requires a little bit more, it's a little bit more advanced and a bit more skills because you would need to have your technical analysis for catching reversals would need to be so strong. And I think you need to combine it with fundamentals as well, okay? So fundamentals combined with technicals will help you catch reversal. But if we are just trying to catch really quick and safe trades, I think catching continuations happen very often on the trade. So we need to identify trend because let's say we have concluded that price is going on an uptrend, we immediately want to get in for a buy, okay? We're immediately buyers to get in for a buy because we are trying to play the trend, okay? And if we feel that price is going on a downtrend, we immediately try to get in for a sell. Okay, so in this case, although I do see the double top forming, I have to say that price is moving in an uptrend with higher highs, higher lows, higher highs, higher lows. Okay, so price is moving in an uptrend, and if anything, I think it might be moving in an ascending channel. Ascending channel means uptrend channel. Let me see if I can beautifully draw this channel. Okay, so I'll draw as a trader, or when you are charting, is to identify and to collect as much information as possible, and then use that information you have collected to come to a calculated decision of whether you think price is going up or down. Okay, so it's never going to be like, oh, I'm 100% sure price is going up or price is going down. It's just probability. So based on the data and information you have collected, what is the probability of price going up or down? Okay, you can use technical analysis to decide that, and I'll show you guys what I mean. Okay, so now we've identified an ascending channel. Immediately, we're a bit more biased that price is going up. Okay, we're a bit biased that price is bullish, and therefore we're a bit more biased that it's a buy. So at this current point of time, just using the ascending channel alone, we have already found one bias. The more technical analysis we apply onto the charts, our bias will change. So right now it's bullish, but after I've applied my support resistance, my Fibonacci levels, my indicators, I might not be bullish anymore. Okay. Okay, cool. So ascending channel, bias that there is bullish pressure. That's the first thing we want to identify. The second thing we want to identify is support and resistance. Why are we identifying support and resistance? Because support and resistance will be your entry, your take profit, and your stop loss. And then we combine that with Fibonacci levels. Why Fibonacci levels? Because Fibonacci levels will fine tune your entry support, entry, stop loss, and take profit. Okay, cool. Let's identify the support and resistance. The easiest way to identify support and resistance is to look at where current price is at this current point of time. And then we're gonna look for the nearest swing low and the nearest swing high. Usually, the nearest swing high and the nearest swing low will work fine as your support and resistance. Okay, so we've got our resistance there and we've got our support here. I'm just gonna change the name of this lines to support and resistance. We want to keep our charts as clean and tidy as possible, because just in case like we go watch a movie, right? Or like we, I don't know, like go with your friends or go have dinner, whatever it is, you're away from your charts. You go and do whatever it is and you come back, like there's a bunch of lines that you don't even know means what it means. Okay, so by having a system and codes to certain things, when you come back, you will know why you drew certain things a certain way. Okay, so whenever I'm drawing an ascending channel, my channel is green. Whenever I'm drawing a descending channel, my channel is red, because that to me will tell me if it's bullish or bearish. Anything that is red is bearish, anything that is green is bullish. Okay, so for the resistance, I put it red, and for the support, I put it as green, because ideally, the general thumb of rule is that every time price is at a resistance, we expect price to reverse, and therefore we enter for sell. And every time price is at a support, we expect price to bounce, and therefore we enter for a buy. That's why I put it as green and red. Okay, now that we kind of identified, we have collected some kind of information from the daily time frame, we're going to move down to the 4 hours. So why am I doing this? It's because I am a day trader. So when the time frame you look at is based on whether you are a day trader, swing trader, or scalper. Okay, if you have decided, like, you need to ask yourself what kind of trader you are. If you have decided that you want to be a scalper, the time frame that you should be looking at is 1 hour, 15 minutes, 5 minutes, 3 minutes, whatever it is below 1 hour. Okay, because I have decided that I want to be a day trader because I only want to be in and out of trades within the day. So the time frame that I look at is the 1 hour and the 4 hours. Okay, so but if you're someone who wants to take a trade and you want to go live your life and you don't want to look at charts for a long time, then that means you are a swing trader and you should be looking at the daily, the weekly, or the monthly. Okay, so because I plan to look at charts every day, I have decided that I want to be a day trader and I will look at the 1 hours and the 4 hours. Okay, cool. Oh, okay. I see more people join. Hey, Thomas. Hey, Lorenzo. Hey, Pedro. There's still, okay, there's still so many of you joining. Hey, Tara. Welcome to our webinar. Okay. A lot of your names are not familiar to me other than Philip, who is here every week, Baptiste, who is here every week, Williams, that is here every week. Can the rest of you who are new here let me know your experience in trading and how long have you been trading? How well do you know technical analysis? How well do you know certain things? Okay, today our main focus is technical analysis, okay? I'm gonna show you guys how to use certain things. For the new ones here, if you wanted to look at other things like a bit more in depth, like trading psychology, risk management, and whatnot, which is actually super, super important in trading, you can join our Tuesday's webinar. So Tuesday is more on the basic and the fundamentals of trading, and today is technical. We is strongly focused on technical analysis. So can you guys let me know, like, how versed are you guys in technical analysis? Yes. So Monday is fundamentals. So we do 3 webinars for you guys a week. Monday is strongly focused on fundamentals. Okay, we've got our fundamental specialists. Oh, okay. So you guys have been trading for a while. Nice. Okay. Tuesdays again is all the other things that is not technical or fundamentals, like trading psychology, just going through some of the basics. And today we are heavily focused on strategy and technical analysis. Okay, cool. I see the new people here are a bit experienced in trading, so I might not have to explain everything in detail because you'll be like, I already know this. Okay, right. So I'm just going to try my best to go quick so that we can cover a bit more charts today. So the first charts I'm going to explain a bit is more for the new people. Subsequently, after EUR, JPY, when we move on to Bitcoin, I'm just going to go fast, okay? Okay, cool. So now that we have identified, we have collected our data from the daily charts, we're going to move on to the 4 hours, okay? And look for support and resistance to narrow down where we think price is going to go on the smaller time frame. Okay, so the first thing that we want to acknowledge is that there is a double top. Thanks, Baptiste, for identifying the double top. So double top is a chart pattern where it forms an M. Do you see this M? Okay, a double bottom is a W pattern. So this is M pattern. Usually after this M pattern, it's a downtrend. Okay, usually after this M pattern is a downtrend. Okay, there's certain requirements. There is a neckline that you need to break. It needs to form after an uptrend. Okay, so I think in this case, it has met. It seems like it has met the requirements. So I'm just going to identify where I think this possible entry will be. So right now, based on the double top and based on how price just recently reversed off our resistance, our bullish bias earlier on has now shifted to us being a bit more bearish, okay? We're a bit more biased that in a very short time frame, at least in this point of time, we think that price is going to drop, okay? So we are going to enter for a sell. So even though price is moving in an ascending channel, it doesn't mean you cannot enter for a sell. It's just that personally, I prefer entering for a buy because they will be, I'm going with trend because trend is your friend, right? But it doesn't mean that I cannot enter for a sell. Okay. Okay, cool. Yes, I do see that as well. Okay, so in this case, even if we are entering for a sell here, we're entering for a sell here or here, we will still be respecting the ascending channel, okay? So this is totally fine. It wouldn't make sense if, like, for example, the channel was here. I'm just drawing a really random channel and you're entering a sell at the bottom of the channel. That wouldn't make sense because then you need to break the channel to fulfill your sell. But in this case, to fulfill our sell, it would still be moving in a channel and it would not be breaking or going against the information that we have collected on the daily time frame. Okay, so now that we have identified our support and resistance, I'm going to change this to first resistance and this to first support. Sorry, second resistance, so that we know we have clean and concise information. Now what we're going to do is look for Fibonacci confluence near the first resistance. Why are we doing this? Because the first resistance will be our entry, okay? Our probable entry. Again, guys, this is looking for charts and analyzing charts is quite a process. It's structured. There's a lot of things you have to go through. So based on the information that we have collected at this current point of time, we are looking for a sell, okay? Later, as things progress, we might not be looking for a sell anymore, okay? But at this current point of time, we are looking to get in on a sell because of the recent reversal on the second resistance and because of the double top. So there's two things identifying or giving us, like signaling us that we could be possibly going in for a sell. Okay, I'm gonna look for support, Fibonacci levels that line up on near our first resistance and second resistance. This will work as your a little bit more precise in getting in on your entries. So Fibonacci retracements, extensions, expansions, and projections are super strong tools. You can use this to kind of like pinpoint exactly, like I'm not even kidding you, on the dot where you think price is going to reverse, right? Because whenever you spot a confluence, a lot of time it's so accurate. 1, 2, 3. Okay, 1, 2, 3. Okay, I'm counting because Fibonacci projection requires 3 dots. Okay, so straight off, I do see a Fibonacci confluence at our first resistance area. Okay, it just means that when price comes here again, if price pulls back to this area, we have a bias that price is going to reverse from here. Okay, why we have a bias that price is going to reverse from here? For the new people here, just going to quickly explain. This is Bob. Okay, Bob is walking to the left. Sorry, right. He's walking, he reaches a door. The door represents your support and resistance, okay? If the door is light, he will be able to push the door and go into the next room. If the door is heavy and there's a lot of resistance, let's say there's a lock on the door, for example, he's gonna have to turn back. So similarly with price, if price reaches our first resistance and the first resistance is strong, okay, the first resistance is strong, price is going to have a hard time breaking this first resistance and it would have to reverse from here. Okay, so at this current point of time, we've got our door here and every Fibonacci level represents a 10 kilos rock that is lined up behind the door. So not only does Bob have to push the door, he also needs to push the two 20 kilos rock behind the door because we have 2 Fibonacci levels here. So I would say this first resistance area does have quite a bit of resistance or barrier and price will have a hard time pushing it. Okay, but that being said, right, I'm not saying that Bob will forever not be able to enter the next room if the door is heavy, okay? Let's pretend Bob has muscles, like he goes to the gym every day, okay? He has muscles and he's a super strong person. He's just gonna push the door open because he's super strong, right? Similarly to price, if the bearish or bullish momentum is super strong, okay, even if there is a super strong barrier, a super strong support resistance, price might still be able to break it because of the momentum. Okay, so that's when you bring in other things like volume, current market trends and current market momentums and things to consider whether price is able to break the first resistance. Okay, so the more things you combine, the more data you collect, the more accurate your analysis will be. Okay, so at this current point in time, there's no it doesn't seem like the bullish momentum is super strong. Okay, if it was, this double top wouldn't have formed. Okay, so I do think there is a possibility price might just come here to our first resistance and reverse from here, and then we enter for a sell. Okay, I'm going to look for a closer take profit. Why? Because this take profit that I have drawn this level that I've taken from the daily time frame, if you think about it, for price to even reach our first support, it will need to break and go out of the channel to reach the first support. And we don't want to take that risk. Even though it might happen, we don't want to take that risk because, again, for price to reach a first support, Bob needs to cross another door and he might have a hard time crossing the door. Okay, so let's look for a closer support which might work as our a closer take profit. Okay, so this is a closer one. I'm going to change that to first support and this to second support. That's your possible take profit 1 and your possible take profit 2. Okay, being very conservative, I usually just get out when it reaches the next zone, which is the first support. Okay, if price successfully breaks this first support, then yes, it's going to continue to the second support. If not, then on a conservative basis, just being very, very conservative, you can just take profit at the first support. Okay. Actually, to identify if price will break the first support, again, we can just use Fibonacci confluence to see that. But just be conservative, okay? Just take profit in the first support area. Like, just take profit in the first support area. Okay. Now that we have gotten our analysis and we've collected all the information and we have found our bias, we're just gonna back our bias up with indicators. So I don't know why they're called indicators. The only time I use indicators is to support my bias on my analysis. Okay, I've actually heard this saying from quite a profitable trader, and he was saying that traders who trade based on indicators alone are traders who lose. And I totally agree with that because price action is king, right? Support, resistance, trend, Fibonacci, I think is superior to indicators, okay? Therefore, you should only be using indicators to support your argument of your analysis, okay? Right now, our analysis is a sell. Let's see if the indicators are agreeing with our analysis. So anytime I find that the indicators are not agreeing with my analysis, now I have two options. One, I don't get into the trade because now the indicators are telling me like, nope, like we're not agreeing with your analysis is wrong. Okay, or two, I can get in still, but I need to accept that there's a higher chance of my trade not being correct, and maybe I can just take a smaller lot size. I think best if you just stay out. Right? We don't need to force stuff, okay? There's trades happening every single day. We don't need to force trades. There's like so many waves happening every single day. There's so many charts. There's like cryptocurrency, there's index, there's Forex. If you miss one trade on like EUR JPY, for example, just move on. Just go to EUR USD. Just go to EUR AUD. There's like hundreds of other charts for you to chart on and look for setups. Okay, cool. Okay, so I have pulled out 4 indicators. Wait, 1, 2, 3, 4. 4 indicators. The ones at the bottom, the off chart indicators. So there's 2 kinds of indicators I'm using right now. One is on chart indicator and 3 are off chart indicators. So on chart indicators are indicators on the chart. Like it's basically what the name says. It is on the chart. So it's where price is. And off chart indicators are things like stochastics, RSI, MACD. They're at the bottom of the charts. Do you notice? So usually off chart indicators are used to kind of measure volume or trend, look for divergences and whatnot. So the only reason I'm pulling out stochastics, RSI, and MACD is to look for divergences or to see if it agrees with my analysis. Okay, let's look at what Ichimoku is saying. So right now, if we are using Ichimoku to support our argument, it's not, okay? Because price is above the Ichimoku cloud and the conversion line is above the baseline. So just based on Ichimoku alone, Ichimoku is not agreeing with our analysis, okay? Ichimoku is saying that it's a buy, okay? But we think it's a sell because of the double top and because price broken that support, because of the Fibonacci confluence. Okay, so there's certain things that are telling us that it's a sell, and Ichimoku is saying it's a buy. So that's totally fine. Let's see what the other indicators are saying. Cool, stochastics is agreeing with us. Stochastics recently just reversed off the resistance as well. So it is exactly what happened on the chart. So stochastics is agreeing with us, and that's one good sign. Let's see what RSI is saying. RSI is saying RSI is saying that there is a bearish divergence, if anything. Possible bearishness, which is supporting our argument. MACD is saying that, let me see. Can you remind me the parameters you use on your oscillators, please? What do you mean by this? Like the settings? Okay, we've got a problem here. So I pulled out 4 indicators, right? Okay, for stochastics, we use 21, 5, and 3. Okay, so the reason we use 21, 5, and 3 and we don't use the default settings on TradingView is because 21, 5, and 3, based on back testing, we have found is most accurate on most timeframes and most charts, okay? But it doesn't mean it's accurate on all timeframes and all charts. Why? Because different timeframes and different charts will give you different information. So the settings you should be using is either the default one or 21, 5, and 3. If you find that 21, 5, and 3 is not even effective, don't use that indicator. Do you know what I mean? So I'll give you an example. Ichimoku is very good at catching trend. Okay, so every time there's a breakout on the Ichimoku cloud, it's very good to catch trend reversals or trend continuations or whatnot. Okay, but Ichimoku does not work on sideways market. You can see Ichimoku working horribly on sideways market. That being said, if anytime you see a sideways market, you're looking at a chart and it's going sideways, do not use the Ichimoku because Ichimoku is not going to give you accurate information. So similarly with any indicator that you're using, only use it if it's accurate to that time frame and that pair that you are looking at. Okay. RSI and stochastics is agreeing with our analysis, but MACD and Ichimoku is not agreeing to our analysis. Okay, I'm just gonna backtest a little to see how well Ichimoku even worked on this chart. It's working fairly well. It's not the best. Okay, so why you want to backtest is to see if you have identified that Ichimoku doesn't even work well on this chart, it just means that whatever information that Ichimoku is giving us shouldn't be taken into consideration. Okay, let me see how well MACD was working here. MACD was working fairly well as well. Okay, so based on the 4 indicators that we have pulled out, okay, 2 is telling us that it's a buy, 2 is telling us it's a sell. So my question to you guys is, are you going to get into this trade? If half the indicators are telling you it's a buy and the other half is telling you to sell, are you still going to get into this trade? Personally, I won't, okay, because there's just it's like the stars are not aligning. You know what I mean? That means your probability is low. Okay, it's the same as like, let me think of an example. It's the same as like crossing the road. Okay, like you're crossing a super busy road, right? And like looking left and right increases your chances of getting to the other side safer. Using a proper pedestrian gets you to the other side safer. But at this current point of time, you're trying to cross the road, but the traffic light, the pedestrian crossing traffic light, I don't know what it's called, the traffic light is broken. That decreases your chances of getting to the other side of the road safer. So it's the same as like the charts we're looking at right now. 2 are telling us it's a buy, 2 is telling us it's a sell. Like, let's not get in because it's like we're not confident with this trade because the stars are not aligning. Okay, it's kind of like a 50-50 kind of chance trade. And anytime it is 50-50, you shouldn't get in the trade. Why? Because 50-50, you might as well go to the casino. Like playing blackjack is also 50-50. You know what I mean? Like, so the whole point about trading. The beauty about trading that is different from gambling is that it's calculated risk, right? You only get into a trade where the probability is high. If it's not high, you might as well go play roulette in a casino. Okay. That's why you have more options with trading and technical analysis. Okay, yes, exactly. Okay, I'm going to move on to the next chart. I do think if I have to give a percentage of how strong I think this sell is going to be, I think I'm like 55% confident that it's a sell. Like, I would be a bit more confident if the indicators were agreeing with me. Okay, maybe 55 is a bit low, maybe like 60%. Like, if I had to flip a coin, like my probability of it landing on head is a bit higher, I think. So probably of this being a sell is a bit higher. I think it could be a sell, but do you want to take that risk? I don't encourage it. Okay, let's look at BTC. USD. Okay, now that I've explained, hopefully all the new people here, the beginners here, know what I'm talking about. I am going to go fast now, okay? I'm not going to explain why I'm drawing certain things. I'm going to remove everything. Let me just check with Deborah, since you were the one who requested for BTC. Is there a particular time frame you want me to do the analysis on? Or are you cool with just 1 hour and 4 hours? 1 hour and 4 hours, perfect. Okay, cool. No worries. I'm here to help you guys improve in trading. Okay, 4 hours. I don't want to look at the daily because that would not be relevant if you're going to the 1 hour. Information on a daily time frame is not relevant on a small time frame. Okay, for sure, BTC is on a downtrend. Like, if anyone sees it's on the uptrend, let me know, because I don't see any signs of just one look. I don't see it being on an uptrend or downtrend. Okay, so let's see what we can collect. Support resistance. Support resistance not the best. Kind of looks like it's ranging in this very small area here from the 21,000 or 22,000 area to the 17,000 area. It looks like it's ranging a little bit. Okay, if you just narrow it down even more, you'll see what I'm talking about. Okay, it's just such a small area. The structure of the charts is not the best. Structure of this chart is not the best. This is the best support resistance that I can identify. So confluence 50%. Nothing's lining up. Let me see if this is lining up. Not the best, but okay. There is a bit of strength on the support area. What about the head and shoulder on the 1 hour? Do you think it has been invalidated with the last leg up? Okay, just give me a sec. Let me see what I can get on the 4 hours. And then we'll slowly move into the 1 hour. Okay, just take note. My strategy where I'm using, which we used earlier on, works very well on certain charts because of the structure of the charts. Okay, from my understanding, BTC and ETH has been working well with Elliott wave. Okay, but let me see if I can. Okay, the structure on 1 hour is so much better. It's so much clearer. There's so much more support and resistance that I can work with. Head and shoulder. Oh, wow. There is a head and shoulder here. Good catch. Okay, there's a head and shoulder here. So usually after the head and shoulder, for it to be valid, it was supposed to break this point here. Okay, but in this case, it kind of bounced. I would say, yeah, I wouldn't say the head and shoulder is not valid anymore, but I would say chances it's probably not going to work out anymore, because usually when head and shoulders is formed, there should be enough bearish momentum to break this support here and continue down. But in this case, I think the markets wanted to push it up. Okay, so I don't think we should be taking this head and shoulder as consideration for making our decision. Okay, but nice spot on the head and shoulder. If I saw this head and shoulder, I probably would have wanted to get in for a sell as well. But looks like price didn't have enough bearish strength or momentum to push it down. Therefore, I don't think we should continue using this head and shoulder on the 1 hour on BTC. Okay, it looks like there's a little bounce here. I was told that there was a bullish divergence on BTC, so let's check that out. Let's check that bullish divergence out. Okay, one thing I noticed based on indicators, conversion line passing the baseline on the Ichimoku. So anytime the conversion line passes the baseline, it is Ichimoku's like in the Ichimoku's way of telling you that there is a possible trend reversal. Okay, there is the starting of a possible trend reversal. Let me see how well Ichimoku worked here. Ichimoku works super well on Bitcoin and Ethereum. Okay, so Ichimoku is already indicating that bearish momentum is losing and there is bullish momentum that is present right now, but it's still under the cloud. Okay, so I think to confirm the bullishness, price needs to break this first resistance here at 20520. 20520. If price breaks 20520, more likely you will see price continuing up to the 21800 area, okay? Because that is the next resistance area that I see. Okay, so if price breaks first resistance, I expect it to go to the second resistance at 21800. Okay, but the confirmation is the break of the first resistance. Let's see what the oscillators are saying, because I want to spot this. I want to see if that divergence is really on the chart. Okay, I can't see it on stochastics. Just give me a sec. Someone told me there was a divergence, but I'm not sure on which indicator oscillator they were seeing it on. Okay, I see the, nope, that's not a divergence. That's just supporting that it's going up. Okay. I think Bitcoin is indicating some kind of bullishness. Okay, there is existing bullishness on Bitcoin, right? But to double confirm this bullish momentum, price again needs to break this first resistance. If it breaks this first resistance at 20800 area, I think there's a good chance that it will go to the 21800 area. Okay. Let me see how strong the confluence is on 50%. Okay. Usually, I will call for a sell from here, because not only there's a 50% Fibonacci retracement there, there's a horizontal swing high, and there's also the Ichimoku resistance there. So Bitcoin needs to break all three of these things before it can go higher. I think there's just so much resistance there. Honestly, if price reaches this first resistance area, this is that area where you can consider getting in on a sell or a buy. Okay, this is the key area. If price breaks, you can get in for a buy. If price doesn't break, you can get in for a sell. Okay, so this first resistance area is a crucial area to look at. The break or the respect of this area, a big door. Yes. It is a big door. It's a super big door. Okay, so the break or the reversal on this area will determine whether you get in on a buy or sell. Okay, so I will also be looking out for this area, 20800 area. Yesterday, I had a pending order here at a 20800. Yeah, it played out nicely. This played out very nicely. Okay, this was my trade for yesterday, but today it's back at that key level. Wait for the break. Okay, if it breaks, get in for the buy. Doesn't break, you should be okay for a sell. Okay, because oh my gosh, actually there's just so much things saying that's a sell. It's but there's actually more reason for me to believe that it's a sell. Okay, but you need to confirm it when price gets there. Wait for the candlestick pattern to form. Okay, I won't be able to explain to you guys about candlestick patterns because it's a topic on its own. Okay, it's a large topic on its own. So go and Google reversal candlestick patterns, and then you can Google continuation candlestick patterns as well. When price reaches this first resistance, wait for the candlestick to form to give you more information whether it's going to be a reversal or continuation, and then you can get in for your buy and sell. Okay, cool. We are going to move on to the next one, JPY. I'm just gonna randomly choose one, JPY AUD. What do you guys think? Okay, you know what, JPY, USD JPY. There's so many of you here today. I'm so glad you guys found your way to Zoom. I think a lot of people were like stuck on YouTube for the longest time. Yes. Okay, let's see what USD JPY is telling us. I've got 8 more minutes with you guys. I think I probably can analyze 2 more charts or 1 more. We'll see. Okay, one thing I noticed on the 4 hours is the recent break of this resistance. It broke the resistance and now its price is back at that resistance, and there is a doji there. Do you see that doji? Anytime you see a doji, it means that there is uncertainty. Okay, so every time you see a doji, it just means that half the people think that it's a buy, half the people think that it's a sell. Okay, so there's a bit of war going on. Okay, we don't know who's gonna win. We don't know if the bulls are gonna win or the bears are gonna win. Okay, so right now price is back at our key area and a doji just formed, suggesting that there is a bit of confusion going on. Okay, let's try to identify a few support resistance area, identify trend. It's an uptrend. I don't know if anyone else sees a downtrend. I personally only see an uptrend. So a bit more biased to look for a buy. Let's move down to the 1 hour. 1 hour price is testing that key level. Okay, it's a bit biased. This is why every time you start your analysis, you should clear and remove all indicators. So just now when we came into USD JPY, I already saw that Ichimoku was signaling a sell. Okay, so Ichimoku I was a bit more prejudiced and biased that it's a sell now because of Ichimoku. But by right, your bias should be based on horizontal levels, Fibonacci trend first, then indicators. Okay, you need to use the superior things, the things that give you superior information before you use the other things that are supporting the information that you've collected. Okay, Looks like price is trying to break this first resistance area. I'm going to change this to first support. Price is trying to break this first support area. If price successfully breaks this area, I think there would be a bit of a bearish move. The next support area is here. Of course, I'm going to use Ichimoku because I already saw it. Just give me a moment. It's where the 61 is. Okay, so there's already a bit of resistance in this area. Okay, no. Okay, so other than the 61.8% Fibonacci retracement, no other barriers here. Good chance price is going to go to the second resistance. Of course, Ichimoku is going to support us. Okay, this is very nice. Do you see how price just recently broke the Ichimoku cloud? Okay, price just recently broke the Ichimoku cloud. This is a super good thing when it comes to Ichimoku. Okay, let me just back test and show you guys how well Ichimoku works. Okay, let's look at this part. Price broke, it shoots up. Conversion line is above baseline. Price broke here, it shoots down. Price broke here, it shoots up. Price broke here, it shoots down. So Ichimoku is very well in catching trend reversals. Okay, it's a lagging indicator, but it's very well in catching indicators. This one is a very nice one. Price broke the cloud, conversion line is above the baseline, and it just freaking shoots up and never turned back. Okay, so I would say we're a bit lucky because we just spotted this when price just recently broke. Okay, so I am biased that it is bearish because I accidentally saw the Ichimoku, but to confirm the bearishness, price needs to break the first support, break this 61.8%, then we can play the breakout. Okay, you can play the breakout if that happens. If that doesn't happen, stay out of this trade. Stay out of this trade. Okay, where can you play this to? Second support. I actually think it's a very high probability trade. Ichimoku works very well at breakout. The problem is it's a bit hard to catch a breakout unless you're on the charts like every day and every hour. Okay, depending on the time frame you are looking at, right? Like look at this part, like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Ichimoku broke this price, this area, it went up and it probably ranged for the next 50 candles or so. So the next 50 hours, it stayed above. Then it took them like 50 hours to break the cloud again. So I think we're a bit lucky that we spotted this break here. There's a chance that we can play this breakout for this sell. I'm personally going to wait for this break here and I'm going to get in for a short. Let me see if other indicators are agreeing with us. I think MACD would be a useful indicator during times like this. MACD is just saying that bearish. Okay, MACD is agreeing with us. Bullishness on MACD has decreased. Okay, has decreased. That means that they're a bit more bearish now. Okay, RSI is moving down. I think everything's aligning. Everything is aligning. RSI is moving down. It's agreeing with us. Let me see what stochastics is saying. Stochastics is also moving down. Okay, all 4 indicators that we're using is agreeing that this is a sell. I think this is a super high probable trade. You guys can consider getting in for the sell if you want to, okay? If you want to, get it at your own risk at the break of the first support and the 61.8%. Okay, yep, looks like we ran out of time. So I will catch you guys next week. I'll catch you guys next week. Thanks for attending my webinar. I'm so glad to see all the regulars back here. And I'm so glad you guys found your way to Zoom. I think some of you were stuck on like Facebook, on like YouTube for the longest time, and like it wasn't working out. But yes, I'm glad you guys found your way to Zoom. I'll catch you guys on, let me see, I will take you guys on Tuesday. Yes, Tuesday we're gonna go through. We went through technical analysis 101 already, right? I think next Tuesday will be something to do with trading psychology. Okay, so I'm excited to take you guys for that because it's also a refresher for me. Okay, so thanks, Baptist. Thank you. Thanks for attending. Thanks, Lorenzo. Thanks, Deborah. Thanks. Okay, bye guys. Bye Philip. Bye Ellie. Bye Joash. Bye Brian. Bye Muhammad. Bye Zara. Bye Defree. Bye Tuan. Bye Jasper. I will catch you guys on Tuesday. See you. Okay, how do I turn this off? Bye.